I'm Alan Kinney, Editorial Director with REIT.com, and we're at the Wynn Las Vegas for REITWorld 2015, NAREIT's annual convention for all things REIT. Joining me is Howard Schwimmer and Michael Frankel, co-CEOs of Rexford Industrial. Rexford's made quite the splash in the acquisitions market in 2015. What's driving that?
Great question, by the way. I think when people typically think about Southern California, we all agree it's a great place to own and operate industrial real estate. But the next thing you hear usually is, boy, it's sure hard to penetrate the market and be able to buy transactions in volume. And so for Rexford, we do it a little bit differently. We have our own proprietary research, as well as very deep and long-term broker relationships. And that enables us to buy lightly marketed and off-market transactions. And since the IPO, we've done about 72% of our acquisitions that were lightly marketed and truly off-market. And that really separates our ability to buy from the overall marketplace. And as far as what are those transactions, about 27% of what we're buying is in a category we call generational ownership shift, which has to do with aging owners of industrial real estate. A lot of the product was developed in our infill markets post-World War II era, and these owners were the general partners of smaller partnerships, larger partnerships. They're octogenarians and aging, doing estate planning. Sadly, many are passing away. And so we're seeing a tremendous amount of that real estate that the heirs are not really interested in owning and operating going forward.
Tell me what you're hearing from tenants as in regards to their needs for space.
Yeah, no, it's very interesting right now. And first of all, demand is growing in our markets, and we have an extreme scarcity of supply. Overall, our infill markets are about 2% vacant. And if you drill down further, we have very large submarkets approaching 200 million square feet that are around 1% and sometimes even just below 1%. So we have an extreme scarcity of available product. So the number one issue for tenants is, can I find space? It's not a matter of a specialized use space or a particular type of space. Can I find space at all in these infill markets? So that's number one. It's less about specific functionality. Number two, there are some major themes that are driving incremental tenant demand beyond population growth and your basic business growth, which we also have in Southern California, namely e-commerce. The impact of e-commerce upon tenant demand is substantial. So for every Amazon that's out there, and by the way, Amazon just became a tenant for Rexford, there are hundreds of other or thousands of other companies that are e-commerce driven or enabled. And today's the newest front in the distribution arms race is same-day delivery. And so that's pushing the need for tenants to locate their warehouses ever closer to the endpoints of distribution, whether they're distributing locally to businesses or whether they're distributing locally to consumers.
What about trends in leasing? What are you seeing there?
Our leasing spreads are strong. We just completed our 8th consecutive quarter of double-digit GAAP releasing spreads, 16.2%. Cash leasing spreads were 5.2%, and our markets are extraordinarily tight. We've got in the infill markets literally under a 2% vacancy rate from that 1.6 billion square feet I mentioned earlier. And so in terms of leasing, we're seeing a shortage of space. We're in a market now where we're getting inquiries every day from brokers looking for space to satisfy the needs they have in the marketplace, where buildings aren't readily available for lease.
And lastly, it's the end of 2015. How are you guys feeling about the economy, and what does that mean for Rexford Industrial in the coming year?
Yeah, we're at an interesting point in the cycle right now. And although we wouldn't pretend to be economists, but our business, being focused on the small, medium-sized tenant base, is a great proxy or a great view into what's happening in the economy. Because the economy, after all, GDP is made up of about 65% of GDP is made up of small, medium-sized businesses. So it's not the largest companies in America that actually drive the majority of GDP. And so what we're seeing in our tenant base is very robust activity. You've heard us talk about the intense leasing demand from the tenant base, and to the extent that rental rate growth is a reflection of tenant demand and the health of that economy or that segment of the economy, then things are going very well, and we're not seeing that letting down.
Thank you both very much for your time.
Thank you. Pleasure.
For more from REITWorld 2015, check out REIT.com.